I mean, we've had regulation has been a massive topic that's come up quite consistently today. And to have a whole panel, which is effectively on the frameworks for sustainable stablecoin adoption in Africa, that's the main topic. So it's a deep regulatory conversation. And these regulatory conversations can get interesting. And please, can no one take any offense if we say anything about a regulator or don't, or give some opinion. This is all your own opinions, I assume. Not opinions of nature. And
not financial advice.
And non-financial advice. So perhaps you could just introduce yourselves as we go forward and then give us just a quick little background as to your view on the topic and where you hope to take the conversation today.
All right, beautiful. Thank you, Sean. So my name is Jordan. Some of you know me. I've been in this local community for a few years now. I'm with Bybit, running local operations and running our own very vibrant local South African community. We've been sponsoring the Bitcoin events, Joburg and Cape Town for the last few years. Really nice to see the growth, really nice to see a room full of these really bright local minds. I can see everyone's awake. It's the end of the day, it's been a long day, but everyone's engaged, and that's absolutely awesome. It's really what happens in these rooms that really does build the future of what's happening in our industry here in South Africa. So well done for showing up, sticking around, and yeah, putting in the effort. We'll leave it at that. We're going to keep it nice and short.
Yeah, so Felix Macharia is my name, CEO and co-founder at Kotani Pay. We are a Pan-African fintech backed by Tether now, but in operational in about 7 African countries, our focus being on ramp-up from local currencies to USDT. So have had a lot of success in East Africa, but like I think what makes us relevant in this conversation was our vast license as well in South Africa.
Okay, so I've got a series of questions here, and I am going to leave some time for the panel because I think this is often a discussion around regulation where you've got lots of input from the public. But I really want to ask you just to address this one question each if you can. I mean, we all, as we go through launching products across everywhere, Africa, all the different continents we go to, how do we make sure that we can collaborate between the public and private sector? Have you seen collaboration? Is there some examples that you could tell us with? And how does that collaboration potentially expand? And how would you like us to better do that collaboration? I know Darren from FINASA, which effectively is the FinTech Association of South Africa, drives a lot of this, from the South African community point of view. But have you got some of those in some of the other markets as well? And those industry bodies, do they really help?
Yeah, so I think it's a Venn diagram. If you're thinking about collaboration or partnerships, it's a Venn diagram between industry, regulators, and to some extent politicians. And then you have a different mix of collaboration based on the country that you find yourself in. So for us, getting a crypto asset service provider license between 2022 and 2023 meant that we had to read a lot of the policy documents released by the FCSA on matters regulation. We had to prepare ourselves requirement-wise. You need key personnel who have gone through regulatory exams, 1 to 5 with FCSA. So there's all that goes with licensing. So it was more of a regulatory-led process. In the case of Kenya, it was more of a political process because this was going through an act of parliament. And so it was the opinions of parliamentarians that mattered more than the regulators. The regulators were just listening. And I think there's a point where industry plays a role. I think in the case of South Africa here, some big companies, Luno, Vala, and the likes have participated very much in this process. The same can be said of Kenya. Kotani Pay, Honeycoin, and a couple of other companies have participated in that process. I think the Nigerian one went south. So that's a case where there was
Maybe you could give an opinion of why. Why do you think it went south?
Yeah, I think it went south because the political, thing took over, right? So it became more of like, this is the scapegoat for the currency depreciation in Nigeria. We don't have any other, thing to use, and so it became very political, and that's why they kept Binance employees, for 2 years. But I'll say if you look at the Venn diagram, it's more political, regulatory, and industry mixing together.
And Jordan, from your point of view?
Yeah, I think this is really where South Africa thrives, on these kinds of collaborations between the very smart privatized startups and then the more regulatory governmental bodies. You know, if we look at our other industries, like even what's happening in the electricity industry when it comes to privatizing and tokenizing electricity as an asset, even if we look at the privatization of security in our country, you know, this is where things start to actually work. When we leave it up to the government, it's very slow, it takes a long time, and you know, we also have corruption creeping in. And I think, I mean, even from our side at Bybit, the collaborative atmosphere has been so amazing. You know, in South Africa, we don't have this competitive attitude when it comes to crypto. We're a family. All of these exchanges, we have Luno, Valor, Altifire, Bybit, and we're all working together to see how we can do this, how we can make this work, and how we can, we're going to talk a little bit later about AML and, you know, everything in terms of terrorism and keeping things safe for the consumers. And I think we've got this attitude and this atmosphere of teamwork.
Yeah.
And it's just lovely because we all bring something else to the table. Altify has been, you know, huge allies for us in the country, helping us with licensing, etc. And massive thanks to them. And I think let's keep the conversation going in this open, collaborative way where we're all giving our strengths, we're all helping each other. It's great.
Okay, I'm going to put you on the spot. I'm going to say you're the head of the regulatory panel in South Africa. Okay, so you are now out there in the Reserve Bank RW working group, and we've asked you a couple of questions, which says we've got to make a sustainable stablecoin framework in South Africa, and it's got to work. I mean, I know we've got the Genius Act, and we've got all these things that we could follow around the world. Are there any sort of recommendations you would have? Like, what would you want to see changed in the next week or 10 days? Any of you can take this if you'd like, but, you know, Felix, you want to have a go? Like, what would you do specifically, like, to the regulation that exists today?
So I'll say this was the approach that even, you know, in Kenya, the regulators were thinking about, which is, what do we regulate first? I think one of the biggest challenges with regulators was the whole industry is very, you know, overwhelming. There's a lot going on. BTC mining, stablecoins, DeFi, all this stuff. So I think South Africa's approach first to say, we're going to deal with centralized, licensed crypto providers. Like, that's a good approach, because then you capture a lot of people who are probably going to buy stablecoins on exchanges, on wallets, through crypto on-ramp, off-ramps like Kotani. So Kenya looked at that approach and followed that approach, which is we're going to first license centralized virtual asset service providers. The next obvious step, if you look at Dubai, if you look at Singapore, is then to say, this is how we're going to deal with stable coins within our jurisdiction. So I think with the SAB versus Standard Bank case, and you know, that's now in appeal court, but like with that case, you establish some jurisprudence, you establish some precedent for how stablecoins will be dealt with in this market. And I would imagine that it's a very different conversation to be had in Kenya. But like, I think the obvious progression is you have licensed, centralized virtual asset service providers, and then you move on to the next stage, which is, this is how we're going to deal with it as, you know, in our market.
Okay, good. Jordan?
Yeah, no, I think Felix hit the nail right on the head there. I think, of course, we have these models globally that are starting to be integrated that we can use, but South Africa is a very unique model. So I think it's this idea, I mean, that's brilliant. Very brilliant idea, what you've said there. You know, our centralized exchanges have all of the AML processes in place. You know, everyone on Bybit is KYC verified. We know where you live. We know what bank it is that you're using, and you know, we can actually give that info up to the authorities if we need to. But it's this idea of sandboxing. So saying, okay, this is something new. Things are going to go wrong. Things are going, you know, we're pioneering. So let's say, okay, here's a certain amount of time. Here's a certain framework that you're allowed to work in, and let's experiment. Let's have fun. Let's co-pilot, test, and see what happens so that we can open it up to everyone. Small user base, okay. Small amount of time, sandbox.
I understand. Can I just do something in the audience quickly? Do you all think, or how many people think, by a show of hands, should the banks have automatically been given CASP licenses? The one bank person says yes. why not? This is a question. Why not? If there's anybody who's more regulated than any other institution, is it not already a bank? Just a question. Okay, agreed.
I'll say that again. I don't think a bank should automatically get a CASP license because ultimately the services they're providing are different. A Banks Act and a bank, regulated under that license is regulating deposit taking, that kind of thing. Whereas CASP, you've got a variety of different services that they can provide from, arbitrage trading to just having a crypto asset trading platform. So no, I think that would have been an unfair leg up and just inappropriate.
Okay. So in this audio, and I think I really like something what you said there, Felix, where you said there's a huge amount of products under CASP. But inside of that, haven't we got distinguished? We've got a stablecoin, then we've got crypto, and then we've got effectively, someone said shitcoins early on, right? We've got a different world in this space. Which is called real world tokenization. Let's call it real world asset tokenization. So tokenization, crypto product, and effectively stablecoin or tokenized deposit. If I refined the question and I said to you, should all of the banks automatically have been given the right to issue a tokenized deposit? The answer again, does anybody think yes? Okay, it's good. At least we're getting like slightly more people that are saying that. Okay, because they take deposits anyway. To issue a tokenized deposit is just a different technology. Should an asset manager who's issuing product already have been given the right to do a tokenized version of their fund? Okay, so is it a different product? It's not really a different product. So this is an interesting question that I think. And so what I was hoping in this discussion is to show that actually these are very different categories that may have been categorized together. But I agree very wholeheartedly with what Jordan is saying here, is that if you're doing something new like crypto product, and we're trying to integrate a Bitcoin framework for payments for people who want to adopt that technology and want to start offering interchangeability, for example, with the pick and pay payments, like Honey Badger is doing whatever, that could operate in a sandbox because it ultimately is very new. So my question again is this, is that if you had to give advice effectively to what role should the central bank play effectively in ensuring policy coherence and enabled innovation? Now, you've mentioned some of those being sandboxes, but could they work better with some of the regulated entities that already exist that are out there? Here's the question. So how do they, like for example, the JSE or the Cape Town Stock Exchange, or we've got a lot of regulated entities with very good infrastructure. Perhaps we should be doing some of that with them. Over to you.
All right, so I just think that it has to be a very strict, very stringent process of testing, beta testing, alpha testing. Yes, banks, all right, they have the KYC for everyone who has a bank account. They've been doing TradFi for, Old Mutual, 180 years, things like this. They know what they're doing. But you can't just release crypto tokenized deposit platforms and expect them to work. This is something that takes a huge amount of dev. It's new dev, and it's dev that needs to be tested in the real world. So I think to a certain degree, there's a level of trust that comes with these large banking institutions. And yes, they should maybe find it easier to receive their CASPs because they have some level of tenure when it comes to FSCA. But the CASP should only be awarded through very stringent testing. Because next thing, it goes open to the public too soon, and this is blockchain. Like when things get lost forever. And that can happen. So it really needs to be the devs that need to be the best and tested.
Agreed. Understand?
And maybe just to add and say, maybe like, at least in our experience with Kotani Pay, we are B2B facing. So we have seen the transition from just high-risk categories that are coming and asking for stablecoins to more legitimate TradFi businesses that are doing this. So it's our expectation that most companies between now and 2030 will have either crypto or stablecoin strategy. Stablecoin being very important on the payment side. if you're looking at banks in South Africa, I think ABSA taking that step and announcing the Ripple partnership is really good for South Africa's market. But if you move beyond that, you can say banks can participate in the payments aspect because they have distribution. They can participate in custody because
Okay,
they
so
have all those licenses.
Let's talk about that for a minute, right?
Yeah.
So Rob's in the room. He's over there, okay? He's the guy that's dealt with this, and he got this Ripple deal with ABSA. Okay, now, he cannot offer custody. He's not a CASP. He can't hold there's a rule. Is there, now my question is, I know this is controversial, Rob. I mean, you can theoretically offer custody, but he can't touch a token as a bank. Is it fair? It's not fair. Can I ask the question again? Should the banks perhaps have been given CASP licenses to do custody of real-world of tokenized assets should they prove to have the capability? And maybe one or two more hands that are in the audience here. I mean, you've got an organization that has got huge capability, huge custody, huge services. Once they get the technology right, to your point, and it's been tested, can they not? And I think what's happening here, I'm just a question. I mean, I'm supposed to be moderating. I'm offering too much opinion. But is there an ability to, as an industry, get together, as a financial discussion board, go to the regulator and say, perhaps you've given it too big a brush, like too big a brush stroke, and it should be perhaps slightly more nuanced, and give the regulated entities that already have trust, credibility, huge ability to learn, huge KRs, the ability to also enter this space. And they've been held back by lack of regulation. I mean, they've been ready. We had the banking forum here now, and the banking guys, Ricky said, we've got so much stuff bubbling under the ground, but our compliance and regulation people won't let us launch. Now, should we not help them in getting that right? Because they would be great to launch, right? I mean, or not? Are we thinking that we shouldn't? I mean, how do we get them to get out?
So naturally, central banks anywhere around the world are slower to adoption of new technologies. I think even in the case of East Africa, before telcos started getting things called mobile money licenses, it took a while. So, like I said, it was good that South Africa was the first out with crypto asset service provider licenses. I think that it makes sense for an industry body, whether it's FINASA or any other interested body, to start engaging the SAP on especially clear stablecoin regulation. So then the next obvious step is banks can have CASPs, you can have custody, you can have payments, and then fintechs, including even crypto fintechs, can just focus on a unique experience.
So, a burning question that you guys want, because we're addressing stable coins, and this is something which was coming up about this dollarization or Emeryization, I think that was Paul was saying. Can a local currency, stable coins in Africa, if every country in Africa had a very dominant local stable coin in its own currency, would that enhance financial inclusion and protect monetary sovereignty?
Yeah, so this for me is a very, very personal, controversial conversation that I'm very interested in, and it can go one of two ways. When you're looking at a central banking digital currency, you're looking at either a very authoritarian system of control. It can swing that way. We've seen what happened in Nigeria, where all of a sudden, you can't move anything out of the country larger than a certain amount on your credit card. These huge methods of control. I have a lot of Nigerian friends, entrepreneurs, investors, traders, who really struggle because of these new blockchain. What's being implemented there is a very different structure. And I think South Africa won't go that direction. But when it comes to the interoperability of a stablecoin, yes, this can change the game in terms of middlemen when it comes to banks like lower fees, quicker transaction times. I mean, we know that a large amount of our workforce in South Africa is from elsewhere, and they send money out a lot of the time, and the banks don't make it easy, sending cross-border payments using traditional financial banking systems. You're paying on average 6.2% in fees, and 0.2% if sending stablecoins using crypto platforms. And this is literally money that a Zimbabwean worker sending home to his family could be stacking in savings, and this is changing his profit margin. So I think I'm very hopeful that South Africa, I know what's happening with the ZAR stablecoins, and they're moving very fast. And yeah, I think this could swing one of either way. I have no say in it, but I do have hope, and I think that's something that South Africans are very used to, you know, living on a prayer, having a little bit of hope that things can change, that things won't be corrupt, that this won't be a system of control, and that it will actually empower us.
Felix, you've got 30 seconds.
All right, so I think for local stablecoins, that's still an experiment that we are seeing. In the case of South Africa, you have ZAP and ZAC. Kenya, I think, will be launching this VKES very soon, and CNGN as well. So it just depends on the use cases. I think if you look at the adoption of stablecoins in Africa, you have a large part which is B2B, business to business, settlement transactions. I think the prediction there, at least, is that more of the over-the-counter transactions move from just being voice deals on WhatsApp and Telegram to on-chain FX. So on-chain FX means if I have a USDT stablecoin, I can just swap it to a ZAR stablecoin, immediately. So that's one use case I think that's possible. Payments being the obvious next use case. So I get, like, a lot of banks can, just work with local stablecoin issuers to do custody, and that will be interesting to see moving forward.
Okay, so I'll just add on one point, because I think what this point is that just because you tokenize it doesn't mean someone will buy it. Remember I said that earlier. So just because you make a stable coin in a local currency doesn't necessarily mean you're going to have sovereignty protection against the dollar-based token. I think we still got to be careful of how we do that, although it's obviously one step in the right direction, and then we're going to do that. So we've got a little bit of time, so if there are any questions in the audience, if someone's got a statement or a controversial point, please make it all and bring it forward.
Hi guys, thanks again for a great session, very enlightening. My question is for Felix. I'm very keen on the on-ramp, off-ramp, cross-border settlements. I think I've worked in an environment where our customers outside of South Africa really struggle to make payments into South Africa because of liquidity challenges in countries like Mozambique, Zimbabwe, Malawi, as you would know. So I think it provides a real world case scenario whereby people can on-ramp with local currency and off-ramp with the currency of the supplier. Now, my challenge and the question to you is, how does that impact in terms of clearances at the border? Because that's where I see a bit of a challenge. Because obviously, to get the border clearance, one needs to show that the customer has paid the supplier. And in this case, there hasn't been that transfer directly to the supplier because the customer has essentially paid you, and you've essentially paid the supplier. On the other hand, there hasn't really been a transfer of the payment hasn't happened between supplier and customer. And how do you solve that bottleneck that could happen at the border?
Okay, we got the point.
So I'll keep it very short and just say that, and thank you for the question. Just say that one thing you have to appreciate is regulation is still very early, and so a lot of the implementations are also quite early. One thing that we can definitely tell and sense as practitioners is the market is moving much faster than even the fintechs or the banks are moving. So like if you look at just Chainalysis data on stablecoin adoption in Africa, even after the Nigerian ban, I think Nigeria did something like 3 times more stablecoin volume than the previous year. So it tells you that there's adoption, and the surprising thing is at least 60 or 70% of that is still B2B. A lot of that is above $150,000, so it's institutional and business. So if institutional and business are taking that lead and doing cross-border transactions, you find the stablecoin sandwich as a concept. So this concept of I'm able to on-ramp from local currency to stablecoin, and then I'm able to on-ramp and then off-ramp in a different country. So that stablecoin sandwich is what companies, including South African companies like BVNK, have. Basically, they have a whole article. They've wrote on that, and you're seeing Citi now, at least investing in them because of the relationships they're creating with shipping companies, commodity traders, and so on and so forth. So I'll say, if you find yourself in that part of the stablecoin stack, so stablecoin stack meaning your stablecoin issuers at the top, USDT, USDC, then you have liquidity providers, very big ones like Jump, and then you have orchestration platforms like Kotani, Pen, BVNK, and then you have the merchant-facing side of things. So merchant-facing side of things will be like Revolut, that includes a USDT option in its application. Or if we get to this world where FNB can have a USDT option in its application. So if you find yourself in the merchant orchestration or liquidity provider space, then you basically have to capture part of the market, which is what BVNK did very well.
Okay, that was the short answer. Okay, anybody else? Have we got a couple of seconds, or are we done for the service shows? Right, thank you very much. Really appreciate it. Thanks for coming, guys. Thank you very much.
Thank you, Sean. Thank you.
Thank you, Sean.